Ladies and gentlemen, welcome to a new ATFX report. My name is Gonzalo Canete, and this is a report in this occasion related with the Japanese yen, the Bank of Japan, and the dollar Japanese yen, one of the most important pairs in Forex. But as usual, I want to go into these charts, into this pair, and the evolution of the price, mainly by give you a whole view on the macroeconomic aspects and fundamental analysis on Japanese economy and the current situation, why Japanese economy could be one of the triggers for a black swan in the coming months. We're going to study particularly the Japanese bonds, and at the end, obviously, we're going to go to the charts and analyze the price, the projection, and the symmetry of the Japanese dollar Japanese yen pair on Forex to see what is the next move we expect. We will see in the coming months if we were right or not. Please, before we start, subscribe to this channel if you are not. The question is why not? Click on the bell if you want to receive notifications anytime we update new information, fresh information. And also, if by the end of the video you enjoy this content, give me a thumb up and leave me your comments on the box below so I can interact with you and also add in the next reports whatever suggestions you want to put on the top of this. Now let's go to the presentation, because as always I have done a presentation to go point by point and do not miss anything. A starting point is the situation of the Japanese economy, which is massive debt. It's the top one in the, let's say we take the top 5 biggest economies in the world. Japan is the top number 1 in terms of debt. It's it's more than 230%. It's around 237.7%, 236.7% national debt on the GDP, which is massive. Now, the last readings and the dilemma, that's why I was calling this video with that name, because basically Bank of Japan got 2 options right now coming forward for the future in the horizon. They got option E. They keep rising the interest rates. Remember, they rise already 50 basic points. They keep rising interest rates, and therefore they follow the book, they follow the manual of the economy, and they try to contain the inflation, which, by the way, the last readings published in August, it was 3.6% in July. Inflation, rising inflation, 3.6% in Japan. So the problem is not over. It's the only central bank who is planning rise the interest rates instead of cut the interest rates. But the risk of this is obviously increase the financial cost of that massive debt that Japanese is facing. The question is how the government gonna manage to pay the interest on the debts of a massive debt if they keep rising the interest rates. In the past, it was fine. And that's why Japan accumulate this massive amount of debt, because the interest rate has been almost flat, zero, or even negative for the last 20 years. Now the situation is completely different. They're facing the truth of an interest rate rising, which is the natural situation of the capital markets. Is a certain interest which establishes the price of borrowing money, and they need to face this situation. If they decide do not do anything, to do not compromise the growth of the economy of Japan and also the stability of the budgets of the government, in that case, if they keep on hold the policy, the question is what's going to happen with the value of the yen, who has been dropping in the last couple of years to minimums of 30 years. I will show you the charts in a minute and you will understand what I mean. But dollar yen has been rising the levels of the 1987, 1990. Since then, we have seen, we then see the dollar yen at 170, 171, 172, which is at dramatic levels, super low value for the yen in relation with the dollar, and they need to fix this problem, and they cannot fix that problem if they keep the interest rates on hold. So 2 options. They rise the interest rates or they keep on hold. 3 key numbers to understand the situation of the economy for the future. The last readings, 3.6% of inflation in Japan, which is not good because it's forcing them to increase the interest rates. 0.5% of wage growth. Salaries are keep rising, and therefore, if their salaries are rising, unemployment rate is not moving, it means that obviously the inflation gonna remain, at least via jobs, human capital, salaries, and so on. Bond market is that red pilot that is flashing right now in many fund managers who are watching the global situation to see, well, where is the risk coming from? Well, the risk is coming from Japanese bonds. I share every morning a fresh global market macroeconomic report. You can subscribe because it's completely free. I share that report every morning, and this is an extract from one of the reports I did a couple of weeks ago. I put a 10 years Japanese government bond yields have surged to 1.6%, reaching levels not witnesses since the 2008 financial crisis. Since 2008, the Japanese yen, I'm talking about 10 years Japanese yen, reached 1.6% yield. We didn't face this since 2008. Now that's the situation of the Japanese yen. And this is nothing. I also bring a chart from Reuters showing us the 30 years bond of Japanese yen is rising exponentially. Look the verticality of this chart. So the vertical that the yield of the bond is taking is very, very dangerous and super dramatic. And that's why, like I say, all the red pilots, it was flashing recently in the last couple of weeks on many treasury desk. This is the debt in relation of other countries. This is Japan, this is Italy, this is Greece, this is United States, and this is Germany. And as you can see, Japan is the top number one in that top 5 biggest economies in the world, as I told you at the beginning of the video. On the top of that is a political crisis because we have seen the resignation of the Prime Minister in Japan. The question is who's going to come in next, because the one who resigned, the current Prime Minister who resigned in Japan, it was considered the most conservative in terms of budget. So it was the most conservative in terms of fiscal control and so on. And therefore, anytime who's coming now need to choose. There is 2 ways in Japan. Again, the dilemma is coming on this way. There is a crossroad. There is 2 options. If we follow the government goals, it will be focused on growth of the Japanese economy, protect the industry against the trade war of Donald Trump, negotiate. Basically, it's completely different priorities, which is keep the Japanese economy moving forward and make the people do not feel the crisis. If we follow the mandate from Bank of Japan, they need to keep rising the interest rate to control and give stability to the Japanese yen and keep under control also the bonds market. This is the chart finally. As you can see, we are in the top maximum record, dropping for the last few months. But at the end of 2024, we faced the new top highs for the last more than 30 years. Since 1987, since 1990, we didn't see those levels about $160 yen. And that's the situation we have seen a few months ago. Now, it is true also the yen has been recovering after the movements of Central Bank of Japan. They managed to control the Japanese yen. It's also helping the weaknesses of the dollar that recently, the last couple of weeks, 2-3 weeks, has been also dropping. And for the last 2-3 months, Donald Trump has been insisting to cut the interest rates in the United States. And that makes the dollar cheaper, weaker, and more easy for the Japanese yen to adjust the exchange rate. However, as you can see, this chart is giving us the chances that this countdown, this bullish pattern is inviting us that, first of all, see a support about the 141 and also the potential breakout of this trend pointing to 165 again, go to the top records again of the dollar yen, which means, in my eyes, it means not only the on hold actions by the Bank of Japan, they do not cut the interest rates, they do not rise the interest rates, and also the Federal Reserve is making some movements that somehow is gonna turn or twist the dollar and make again strengthen the dollar against the Japanese yen, moving the pair forward. We will see what happens in the future, but this is the projection I bring to you today. And in short term, you can see we have seen all summer a lateral movement from 149 to 146.50 more or less in dollar yen. The next movement, it could take us to 150 or below to 142, but I believe that breakout in medium term is gonna move again to the top record 160, 162 dollar yen. We will see, following, and if you enjoyed this content, remember, thumb up, and I will see you in the next reports. Bye bye.